Hey everyone, hopefully you're having a good day. My name's Andy. My channel's Finding Value. Today we're going to rip through Twitter like we normally do, see what people are sharing on social media. I'll sprinkle in my financial opinions as we go. It's generally related to three different topics: wealth building, financial topics, and or commodities, or precious metals, I guess. So let's dive in. Let's see what the markets are sharing or social media is sharing about the markets. If you want to follow me at Finance, if you want to join our community, we still have a discount going on, LEAP. If you'd like to join, that's where I dive into the sectors a little bit deeper and individual companies. William Middlecoop says it's official, ECB rate cuts coming soon. Bloomberg ECB's, however you say that name, have to cut rates twice before the summer break. So it looks like rate cuts could be coming, and I don't know what the Federal Reserve is going to do. Maybe they work together with the ECB and maybe rates come down a little bit. I don't know. The rates obviously here today, today being March 14th, we're up quite a bit. So it's interesting to see that. This can also manifest in a much stronger dollar. If our rates continue to go up while their rates are cut, our dollar will strengthen, the DXY. Blue Gold Trader, U.S. dry natural gas production is estimated to have dropped to 99.3 billion cubic feet per day, a 2-month low. And there you can see it in 2024, the dark line coming back below 100 billion cubic feet. We do have a lot of inventory of natural gas. We're going to have to cut back production, and we're going to need some demand to bring the inventory levels back to normal. It's going to take some time. But at least it's good that production is falling to some degree. HFI research says I find IEA's arguments about how the OPEC plus cut extension will all of a sudden send the global oil market into a deficit is just utterly fascinating. It's literally not OPEC plus that's cutting, it's just Saudi that's cutting. So OPEC plus, excluding Saudi exports, are basically at all-time highs almost. We've got one, late 2023 in December is a little bit higher than where we are today. So that is OPEC plus excluding Saudi crude exports. This is Saudi's exports. That's been down quite a bit. You can see in 2023 they cut it in April, and it's come on down over the almost for the past year. So Saudi's the one that's shouldering all the cuts in the system. Sahara says this is gold, and I just like staring at these charts, guys, because they're so big and awesome. I do have various targets, as you may have seen. Here I show the percentage gains on two targets. So he thinks a 45% increase to $2,900 or an 85% or 84% increase all the way up to 3,650 is what it looks like, roughly speaking. So that's where he thinks the potential move can go. And I almost see like a shoulder head shoulder deal right at resistance breaking out here. But I just like looking at this chart, this cup and handle here. It looks fantastic. Silver bark. Okay, I really like this chart, guys. I really, really like it. Every silver and gold mining investor should appreciate the significance of the NVIDIA chart when compared to First Majestic. NVIDIA was less than $6 a share when it broke out from a massive ascending triangle. AG is currently sitting at $5.39. So he's got this ascending triangle here for the most part. You can see the lead-in pattern here is very similar to a lot of the patterns that we have in energy service at the moment. And we're right here in those energy service companies. We're right in this area in here. But you can see we broke out, had a monster run, 8,207% for NVIDIA. Now, looking at AG, we've got a very similar setup occurring where we've got this ascending wedge going on. We've broken to the downside, which very well could be a false breakout to the downside, which is a slingshot to the upside. That generally occurs before the end of right before a big breakout. So First Majestic and a lot of other charts have similar patterns in silver, just like First Majestic of these producers. They've been going sideways for a very long time. Further evidence of this occurring, XAU to gold ratio is at an incredibly low level. I think it's probably at the lowest level that we've ever seen, which means that the valuation runway against gold or silver is gigantic for these companies to appreciate against. So that is some evidence that this could potentially occur where we get a gigantic move to the upside. Other evidence is the cup and handle, the 50-year cup and handle pattern on silver, which is further evidence that a big move in silver could occur. So if we can get a gigantic move in silver of the 50-year cup and handle pattern on the futures pricing, and we get an outperformance of the gold and silver mining companies against the metals themselves because they are cheap against the metal, then we could get a full revaluation of NVIDIA-like returns, which could be possible. Now, I'm not stating that it's 100% in the bag, but with a setup like that, I do like it very much. More evidence that this could potentially occur. In the 1970s, that gigantic bull run, that occurred under an inflationary period and a oil-constrained market in the United States. I think that we have the same conditions where we've got credit expansion from debt and fiscal spending and monetary to some degree of loaning in the system against new homes, and a global oil supply squeeze. So I think something could really occur, much like the 1970s. Very similar setup there. Peter Schiff says today's spike confirms that commodity price correction that began in May of 2022, which led to the reduction in headline CPI from 9% to 3%, is over. The chart looks explosive. Commodity prices are poised to soar, leading a surge in headline CPI back to 9%, likely much higher. We've got JC here. He says, market trends evolve, sectors rotate. This is not 2023. We've been seeing a lot of the opposite lately, or actually. So this is XOM outperforming AMR, and this is XOM versus CCJ that is starting to outperform. Those two were outperforming. So oil could be outperforming. AMR is a metallurgical coal company, and CCJ is a uranium company. Kind of the leaders, I guess. Cross-border capital says something's cooking. Latest Fed data. We have Asia Pacific shipping volumes up quite a bit. They're up quite a bit. And I thought they were coming through some massive recession. Well, shipping volumes are up quite a bit. Peter Schiff again, he says higher than expected inflation should be slamming high PE tech names, but the QQQ is barely down. Gold should be ripping, but instead it's down $10. I have never seen a larger consensus be more wrong about something more obvious, including prior to the 2008 financial crisis. I think it's a huge opportunity. If they're going to give me an opportunity to buy metals longer and or oil or whatever it is, commodities, that's great. I'll take it. I'll load up as much as I can before the big move. Tim Hack, and I just like looking at charts, guys. I'm a charty, I guess. Silver is now very close to a launch. We've got a squeeze. Obviously, I've been talking about that quite a bit. I very much like looking at these charts that other people have, and you can see the squeeze there, that it's squeezing up and ready to really rip to the upside. We've got another one. Basically looks like the same chart there. Let me get this zoomed in there. And he posted a potential move even higher if he takes it a little bit higher than that. And then the other one zoomed in towards the right-hand tip of it. We have a potential break. And I like how they say silver, not silver. So HFI research says hilarious. What a massive difference in IEA estimates month over month. And no, don't say it's OPEC because it's not. So this is demand supply balance, and you can see that we're running deficits in the supply here. And that's going to eat through our inventory, which we're already at very low inventory levels. So we've got an increasing deficit coming into third quarter of 2024, and we're going to eat through our inventory more, which will result in higher prices, most likely. This is Justin Hune, Uranium Insider. The big picture remains we will see extraordinary volatility along the way, increasing as the traded volumes diminish in the spot price. So more uncertain than ever. We've got a monster move in terms of deficits coming in 2024 and onward. Demand base case, high case, and I don't see a low case, and then the net zero nuclear case. Utility uncovered requirements, 2.3 billion pounds through 2040. We've got a lot coming ahead of us in terms of uncovered requirements. Got Gary Savage here. Let's read his sayings here. He says this will be the 13th time oil has tried to push through the 79.50 barrier the shorts have been defending. They are not going to be able to prevent the inflation from seeping into energy and the general commodity markets. The banking cartel has already lost the battle in metals, and many other commodities are starting to move. Uranium, copper, gasoline. The CRB is starting to get traction as it comes out of the 3-year cycle low. Smart money is starting to move capital out of the overextended and overvalued stock indexes and put it to work in the undervalued commodity sector. This is always the Achilles heel of money printing. It creates inflation. When the inflation is in stocks and real estate, we consider it good inflation. But when the inflation starts to flow into commodities, it becomes bad inflation. Bad inflation causes economies to stagnate, and when it spikes too high, it causes recessions. Recessions and hard times lead to wars. Government learned in 2008 that they had to suppress commodity markets to keep the inflation flowing in the direction they wanted it to go. That's when the cartel attacks on gold began. But nature can only be denied for so long, and the long-term outlook changed in 2020 when the Fed went on a printing spree like never before to rescue the economy from the COVID recession. Inadvertently, they ignited the bad inflation cycle and ended the secular bear market in commodities. Now they're going to fight a losing battle to try to keep the commodity prices suppressed. Maybe 13 is the magic number for oil to break its chains and start to run higher. And we've got a break here in oil to the upside. It's going to go much, much higher, guys. And when you compare that with the inventory and deficits, we're going higher. JC says, looking at the actual data helps serve as a good reminder that this is not 2023. It's actually very different. XLE versus SPY, oil services versus SPY, and XOP versus SPY. It's all breaking out even further today. And if you draw resistance lines, they're all breaking those resistance lines across. The move in oil and the rotation of money is already occurring in all of these ETFs. It's occurring in the energy service sector. And we just so happen to position in all this stuff before the move, which is great on the website, which is fantastic. Rick Rule says it is increasingly more important for uranium equity investors to understand that the spot market is becoming less and less relevant. And what's becoming more and more relevant is the term market, according to Rick Rule. This is uranium. UROY is the stock. It says tapped the lower line of the broadening plot. Needs to hold this area as the center channel lane if lost. Will target the lower lanes. So we could either break to the downside here and get a bigger return move, or we can bounce off where we're at to the upside. We're kind of at a decision point, according to Sahara, of moving on up or down here for UROY, and probably an extension to a lot of the different uranium companies. We're at these decision points where we could break higher or lower. Grady, the combined gold and silver vehicle CEF has broken out. CEF is a gold and silver Sprott physical uranium or Sprott physical gold and silver trust. Gold is at a historical decade breakout, and silver is getting ready. And this combined together are basically breaking out for CEF for a much larger run in CEF, which is the Sprott Gold and Silver Physical Fund. Massive inverse head and shoulders is what he's got here. We've got SPPP. That's the Platinum and Bull, Sprott Physical Platinum and Bull fund. Watching the action, the upper band aligned with the blue bi-weekly, and here we are looking like we could maybe break to the upside and start moving, or have one last in the tip around, maybe around the apex move that Grady always says. Maybe we've got that coming. To me, I'm going to be a buyer irrespective of which direction it goes. If it goes back down, I'll buy more. If it breaks out, I'll buy more too. But SPPP is the Sprott Physical Platinum and Palladium Trust. And this also is a good indicator of where potentially some of the platinum group metal mining companies could be going to, because it's going to follow both the metals like this. Here's silver in Great British pounds for the Brits, and we've got another cup and handle pattern that's ready to rip. We also have a bullish engulfing, and if the euro and some of those areas over there start to lower rates, I would expect in those currencies that silver and gold are going to go up against. So he's got projections for the Great British pound. It's being priced at 19.32 an ounce today, and he's got 30, 37.50, and 50.50 are the price projections, potentially going higher here. Grady has another one. It says, looks like this ratio is about to move higher, means silver miners is about to start to outperform almost everything. Note the red positive divergence, just like before, the two previous huge moves back in 2016 and 2020. Vital to be on the right companies to get the most gains. So SILJ versus SLV, this will be an epic move in his opinion to the upside of SILJ outperforming SLV. So that is silver miners, the silver junior miners versus silver itself. He says an end around apex move is incoming, my own term and pattern that he talks about. SLV has a breakout and a back test. And then SLJ, the silver miners, has a false breakout in the making that we're going to break to the upside, in his opinion. Go SILJ, I hope, because I've got my bets in the silver miners to hopefully make this all worth it. Let's read another Gary Savage. He says, seriously, people, are you illiterate or just choose to ignore what I said? I predicted the cartel would go down in flames once gold broke through 2090, and they have. There is no need to worry about the cartel any further. At this point, they are going to struggle to figure out how to get out of the short squeeze they made for themselves. Notice the rocket launch price action in metals of the last 3 weeks. This is what happens when you try to artificially suppress price and the manipulation breaks. The banking cartel is no longer relevant to metal traders. How many times must I say this before it sinks in? But his opinion is that manipulation is basically broken. We're moving higher. And that's what I've got for today, guys. So give me a thumb up for the content. Subscribe to the channel. Subscribe to the website if you'd like. We still have that discount LEAP, LEAP. And we have a 7 a.m. question and answer session coming up on Saturday. If you guys are interested in attending. All right, guys. We'll catch you later. This is Finding Value.